Well, I recorded a video for about 17 minutes and none of it, I guess the audio didn't really record, so you guys are lucky. I fucking love you and I love what I do because I'm back and I hope this fucking audio is recording. But yeah, mainly, guys, we've got a few things to talk about. Bitcoin is currently, dumped from midnight about a percentage from 85. What is it? 85.4. It's down to 84 about 6. Not a big deal. Bitcoin will do its thing. You guys know this. But anyway, we're here for the derivatives. Well, we're here for the securities and equities that are on top, right? Really. So for reference, MSTR went up 13.74% this week, and MSTR went up 2.5% this week. Well, at least that's what it kind of shows, right, on the chart. But it's important to keep in mind that we got a $1.34 dollar dividend per share this week. So when you take into consideration that the fund started out at $19.35 and it probably ended in above $21 considering the dividend, we're actually up about 9.5% this week, which is great, right? Given the upside that MSTR got, we've captured a majority of the upside. Keep in mind, if MSTR had gone down, then MSTY would not have gone down as much, right? So you're paying for a slightly less leveraged version of MSTR, so it will underperform both on the upside and downside. But the purpose of the fund and the prospectus of the MSTY fund specifically is not for maximal growth, right? We're here for maximal income. So they're doing that, right? They're crazy good at what they're doing. The product is the volatility, and that is exactly what we're chiefing pretty much, right? And the longer you hold, the longer you reinvest, the more you will be rewarded, right? Set your time horizon further out, guys. Don't look out for this thing of a year now or two. Like, look for the fifth, fourth, sixth year from now. If you consistently reinvest your dividends every 4 weeks, be humble. Do your thing until then. Stack your shit. Stack your stats. Stack your strats, and stack your fucking dividend machine, right? Because the reality is we're all young right now. You might think you're old. Your age doesn't matter. We're young right now. Bitcoin is young, right? Let's wait till this thing gets above 1 million or 2 before we start, to reap the benefits. Just keep that in mind. That's just my 2 cents, right? But there's one thing I wanted to point out because there's a lot of interest regarding the Bitwise fund, IMST, and frankly, I am loving it, right? I think the fund just came out. It's really only been a little bit over a week now. So I think I'll wait for a little bit, see how the dividends pay. And this is perfectly in time for a few months from now, me seeing, the pump up to 150. And then we're going to come back down to 114K in my opinion. So roughly, these numbers are rough, plus or minus a few percent, right? But I'm thinking of not reinvesting any of my MSTY dividends, or at that point, actually, none of my dividends for any of my funds I will reinvest. I own MSTY, Coney, Tesla, and NVIDIA. So for these next few months, what I plan to do is to take these dividends and cash them, right? Automatic profit taken. And at 114, I'll dump all of that into iMist, right? I'm assuming I'll have about 5K by then, so it'll be a clean 100 shares hopefully by then, given IMST is not jumped up by then. It will though, guys. The fund performs quite well. We can see that in the past week. It pretty much got close to 85, 75, 85, 90% of the upside here. Captured quite a bit of it. And think about it really. 11.24% doesn't really include the income they made this week. So keep in mind that'll get paid out probably sometime in the future. Obviously it will, but that income, when you take into consideration the same way we did for MSTY, it's possible that, the IMST security actually performed just as well or even outperformed the underlying. This is because they don't sell as aggressive calls as MSTY does. Why? Well, because they're different securities. They're meant for different things. The Bitwise option income strategy ETF, they focus more on selling further out of the money calls in order to risk less upside, and therefore they get paid out less dividends, right? They'll pay out less yield, right? MSTY as we will take a look at in the few moments following, they're selling calls really, really, really aggressively, right? Through the 310 strike price, right? That's going to be blown by Monday morning. But it's okay because we captured the income and that's what the fund is meant for. But yeah, I kind of just wanted to give you guys that underlying, overlying idea of what's going on with all those securities, equities, and whatnot, right? The main commodity here is Bitcoin. But I wanted to go over the MSTY fund holdings in its entirety as well for April 14th, 2025, the week of at least. So we see that we have about 2.521 billion under management. This will only grow, right? I think we'll add one more zero in the next year or two, and then probably one more zero after that in the next 5 to 10 years, right? It'd be so funny. Like, they're gonna have enough assets to be on the S&P, but they won't be. Unless, I mean, I don't know. Is that even fucking possible, guys? You guys let me know, bro, because I don't think that's possible. But I haven't really looked into it, so I'm not an expert in that shit. But we can take a look and see that the fund is collateralized 60%, which means that they have liquid money out of this billions of dollars. There's this much liquid money, minus obviously the 8.5% here. That's probably tied up as collateral for puts. But we can, oh, actually, no, I'm wrong, guys. 8.5% is right here. It's in the money market. And we have a good amount of money in the long calls and whatnot. And we can see how much of the portfolio we're actually, gaining income type wise by selling these calls, right? Short calls here, that's how much income we can make on that. And the short puts is the amount of premium we can get by selling those, either short sell or just sell those puts. And the long calls are what kind of drives the value up, right? To follow the underlying. But to get into more of like a specific, like we'll get into those later, but treasuries are broken down. As we can see, we've got about 200 days till maturity. People don't realize, but this income that we generate from the treasuries is actually more than enough to pay for the expense ratio. So don't really worry about it. In fact, these treasuries actually generate probably 2.5 cents a share a week, like almost like a dime a share a month, almost, if you think about it. It's not nothing. It adds up, right? If you have thousands of shares, that's like a day or two of free food. That adds up, guys. Everything adds up. But to go over our synthetic positions for May, these are our monthly synthetics, right? So these expire 4 weeks from now. We've got a 260, 270, 290, and 330 strike with equal short put and long call contracts for each strike. We can see that our total contract volume is about 85,000 contracts on both the short put and long call side, right? This in turn is to effectively use, the purpose of this is to use capital efficiently, by using options, but still capture the underlying performance of the asset, right? So if they were using all the money to buy shares, then they wouldn't have money to buy contracts or sell contracts and give us income, right? So they kind of build a position with contracts that simulate or a synthetic delta position on the underlying. And these specific analyses and everything are posted, so you guys can take a look at that later to keep the video relatively short and sweet. But we can see that our weekly options is where a majority of our money is being made. Just off the bat, right? We can see that our net position is about $27 million in income over the 110 million shares, or wherever we are at now. That's about a quarter a share, right? So this is exactly how they're generating the income, right? Specifically, they've got 25.4K contracts that they short sold at these strikes. Now, of course, they're short sold against collateral and against their underlying, which gave them 30 million of these monies, right? And what makes sense is that it's super, super close to the money. And that's what gives them the premium, the excessive premium, right? This is an income fund. It's not meant to act like the underlying equity. And we've also got another 6,000 contracts, a few dollars further out of the money. And you can see that, we've gone way less premium for it, right? Keep in mind the IV rank, IV, and everything is quite low right now. When we start moving up, these premiums are about to be juicy, right? And we'll start seeing those $3, $4, $5 dividends, throughout the year. But now they couldn't really just, short sell all of this and just generate all of that income. I mean, they could, but then if MSTR pops, then you would lose all of the upside, all of it, every single dime you would lose from these positions, right? This many contracts worth, you would be losing money per contract per dollar, right? So in order to give ourselves an insurance policy on that, what we do is we buy calls that are way further out of the money comparison to our, short calls. And in turn, what we do here is we can see we paid about, out of the 30 million, we paid about a sixth of it. But what this will allow us to do is capture the upside, obviously not between these ranges, but from 345, 350 and up, we'll be able to capture that upside, which is, in my opinion, this is looking like a good week, good month. It's looking like a good time to be bullish on everything crypto. Let me rephrase that by saying just Bitcoin, because nothing else is a store of value, in my opinion. There are other cryptocurrencies that will be valuable, but they won't be a store of value, right? Like Solana, if you guys want to hear my thesis on that, or even Tau, or even Ethereum. I've got theses for these things, but they're not necessarily meant for a store of value. The technology itself as a cryptocurrency is valuable, right, in itself. In other ways, right? Money is not everything. But I know you guys are here for the money, so I think we guys can see that the options premium is worth it. The insurance is worth it. This way we capture the upside, right? Because either, right, we get like $5 million more, which is not really much money per share, but then losing all of the upside would really, really suck, you guys. It would suck really bad. So yeah, huge shout out to the portfolio managers. You guys are managing my money, the folks who are watching this, their money, and a lot of other money. So we really appreciate everything, and catch you guys next time. I mean, I'm gonna come out with some more videos and things. Give me a follow if you're interested in this kind of stuff. And in the comments, if you have any kind of suggestions, questions, or want me to focus on anything, I do have things coming out. I'm actually working on this video right here, where I'll compare Bitcoin, MSTR, IMST, and MSTY. Someone also mentioned a similar fund to IMST called BTCC. So I'll definitely take a look at that as well, give you guys the complete investment analysis and performance review. But until then, guys, take it easy. Peace.